Greetings, everyone. I'm excited to welcome John Mizzi, founder and CEO of Vero Technologies. John, welcome to the show.
Thanks for having me.
Yeah, great to have you here. Let's dive in. Tell us about your background.
Yeah, I've spent my career in financial services of some flavor or another. Initially started off doing corporate strategy for Bank of America, spent a few years at an alternative asset manager before jumping over the fence into the fintech world about 8 years ago. I'd previously been working effectively as an entrepreneur in residence for a Danish software development company. The founders had some ideas in the fintech space and had brought me on board to help get the ideas off the ground. We had launched two different businesses together over 4 years, and I'd ended up actually getting some exposure to the wholesale financing world where we operate today as part of a client engagement. And really, that's the backstory to Vero.
Okay, all right, love it. And yeah, let's dive into Vero. Tell us what products and services Vero offers.
Yeah. So fundamentally, we have a platform to provide wholesale or inventory financing for dealers of manufactured goods. What many people don't know is when you drive by the local auto dealership, and the same goes for marine, RV, agricultural equipment, those dealers are carrying really expensive, high ticket value inventory, and they don't typically use their own cash to fund inventory acquisition. They're relying on some type of third party financing. So our platform comes in to help those dealers access that financing. Now, behind the scenes, we have a few different sources of capital. We have a direct lending program where we source the balance sheet ourselves. We'll primarily partner with community and regional banks and help them offer what is a new commercial credit product in wholesale financing by using our platform. And we also work with some legacy lenders where they're simply licensing our platform to administer their day to day business operations.
Okay, interesting. I always wondered, so if we take the dealership example, right? All those new cars sitting there. So they're going to some lender. So they're purchasing it from the manufacturer, but they don't just, it's not just like, hey, just take these cars and if you sell them, great. It's like, no, you got to buy it from, say, Ford. So
Yep.
you're saying they're going to some lender who specializes in this type of credit to give them the type of financing that I guess makes it affordable for them to just carry that interest.
Yeah. So really, I mean, if you go back in history, and I think it's a funny concept today, but the captive finance arms of the auto manufacturers, Ford Motor Credit, GM Acceptance or GMAC, which is, no longer exists, or I guess now it's Ally, even Chrysler Financial back in the day, those were the initial embedded financing providers. The manufacturers needed a finance organization to help improve sales and distribution of their core product being automobiles. And so they were able to, they were large enough and had the balance sheet to do this themselves. The case today, many of the more, medium, even to outside of auto, there's not many OEMs that actually have captive finance organizations. John Deere, Caterpillar do, but even the Kubotas of the world work with a third party. And so where we plug in is really by helping everyone else who doesn't have captive financing from the OEM access wholesale financing to fund inventory acquisition.
Okay. Yeah, I appreciate that clarification. So your customer is, say, the dealership, for example, then.
We actually
Or
view our customers are going to be the lenders who are using our platform.
okay, the lenders. Okay. All right.
And then the
And
lender's customer is going to be the dealer.
okay. So the lender is the customer and their customer, anyone who is holding manufactured inventory, could you say at a high level? So
Yeah. I mean,
like you
we
said,
have
auto, marine, etc.
we have dealers today covering auto, RV, power sports, marine, agricultural, and lawn equipment.
Okay.
But you see this in play for dealers of musical instruments, home appliances, manufactured homes. There's nearly 20 different verticals of manufactured goods that are distributed through dealer networks. And most typically, those dealers are relying on some type of third party financing for inventory.
Okay. And tell us a little bit about your pricing model. I mean, how do you generate revenue then?
Yeah. So it's a SaaS recurring revenue based on the size of the programs that are being managed on our platform. So, and really, but what we've done is take a technology platform that covers everything from underwriting, origination, connecting suppliers, dealers, and their lender on a single platform, and then obviously streamlining a lot of the day-to-day operations of the lenders. But behind that, we also provide certain discrete services that are a little bit unique to the wholesale financing world. So if you think about it, relative to a credit union that does consumer auto financing, where an individual vehicle may be sitting on the credit union's books for upwards of 60 months, car dealers are turning their inventory over every 60 days on average. So the challenge of wholesale financing is that you have a high volume of origination activities that have a very short duration from a lender's perspective. So you really need to have the right systems in place to administer that type of turnover and the volume of origination activity. But also, just like with consumer auto financing, where you're putting a lien on every vehicle, take a title and hold title on every asset. They need to do on-site audits. It's an asset-backed line of credit, but your collateral has four wheels or could get hauled away on the back of a trailer. So you need someone that's actually verifying that the inventory has not been sold. You need to interface with the hundreds of different suppliers that dealers are working with. And so we support, for our lender partners, we provide an integrated title management service. We work with third parties who specialize in doing on-site and virtual audits. We have an operations team who has decades of experience managing the supplier relationships. And so we can help some of our bank partners scale their programs without necessarily having to invest in building out that expertise in-house.
Yeah, appreciate that insight. And that's fascinating. I can see how it streamlines operations, which sounds like a lot of paperwork in that process are maybe now digitized. So yeah.
Our goal is to digitize all of it. And obviously the state DMVs have something else to say about that.
Yeah. Yeah, we won't get into that. But tell us, what year did you found Vero?
We got started in 2020 in the midst of COVID.
Okay. Yeah, a lot of startups in COVID and the pandemic. And then do you have an HQ location or are you virtual?
So we have offices in New York, Greenville, South Carolina, and Scottsdale, Arizona. I guess the HQ would technically be New York, albeit we have a larger footprint in Greenville today.
Okay. And what's your current team size?
There's 25 of us.
25. Great. And anything you want to share around your revenue or AR range?
We're on track to do between $5 to $6 million this year. So the goal will be to be run rate ARR around 9 million for 2024 by the end of this year.
Oh, awesome.
So we've been, aggressively growing, and I think the diversity of lending options that our network provides allows us to really appeal to a broad set of dealers. And we found some kind of opportunity in niches that have been historically underserved. So excited to really double down on those.
Okay. Yeah, that's great. Love that growth. And then tell us a little bit about your go-to-market motion. So if the lender is the customer, how are you finding these lenders? Is it a pretty defined set of lenders out there who deal in this type of credit?
Historically, yes. So I think what has been pretty cool that we've been able to accomplish with our platform offering is we've actually found banks that have historically sat on the sidelines because they didn't have the right systems in place, or they didn't want to build out that servicing operation to deal with the titles and the audits and the suppliers. And so we've been able to bring new banks into the marketplace that have not played in the sandbox previously. But one of the more unique ways that we've gone to market is actually, I mentioned that we have our own balance sheet to use here. Going after, the small and medium-sized manufacturers of some of these different types of equipment and helping them sponsor a program for their dealer networks. Ultimately we can provide a solution that's very advantageous for the OEM of specific types of goods. And then we're able to really, I don't want to say make a market so much as help our banks that we're working with find ways to grow their programs very quickly. And so it's kind of creating more demand versus having a supply of lenders and not necessarily having, a captive network of dealers to go after. We're really making sure that, and going after these OEMs and the dealer networks they've been in business for a while, they've been, forced to use cash or some other type of alternative financing because they didn't have a dedicated solution. We're able to put those programs together and service them effectively using our technology.
And I love that. I love that. What you first said, you found banks who are just not in the market, but through your technology, it's like, okay, actually, we can do this now. It was such a pain before. We don't want to enter that now. Yeah, I love that. I love that. And let's talk about capital raised. How much capital have you raised to date?
So we completed our Series A over the summer. It was an $8.5 million round. Prior to that, we had done a $4 million seed round back in 2020. So, and I think a small angel round before that. So between 13 and $14 million in total. And our goal is really to focus on, that path towards profitability from here. It's obviously a dynamic fundraising market today. Things shift quickly and we want to make sure that we're, in control of our destiny.
So about 13 to 14 million raised to date, 8.5 million Series A, 4 million seed and a small angel prior. And tell us about that Series A. What did you see? What were those triggers or milestones that said we're ready for a Series A?
Yeah, I mean, I think the big one was getting a handful of banks signed up on the platform, really validating that, we had started off in a relatively unique way, but raised our own balance sheet and started a direct lending program almost as a proof of concept. And being able to source banks that were ready to work on the platform and provide financing to dealers through the platform was definitely the biggest milestone that we had worked towards. I think the beauty of the bank partners are they're large engagements. They require a lot of work up front. It's not a fast sales cycle, but we're able to help banks achieve a lot of unique objectives. I mean, today it's a lot harder than it was 18 months ago to find banks that are hungry to, you know, pursue a new loan program, but every bank is looking for additional deposits. And we've seen several of our bank partners who by offering wholesale financing, it's such a unique credit product offering relative to their peers in the local markets where they're operating. They're actually able to attract net new customer relationships that you have dealers that have never wanted to go through the brain damage of moving their deposit and operating accounts, who are motivated to move over that entire banking relationship in order to access the wholesale financing from one of our bank partners. So I think, it's cool to see that the banks are able to achieve not just growing their loan balances through our platform, but achieve some of those, maybe second level business objectives by working in a partnership with us.
And with that Series A capital, how are you thinking about the deployment of that capital in your business? What areas, are you thinking about investing in?
Yeah. I mean, I think with any software business, especially the more platform oriented ones, I think we've gone a mile wide and a foot deep in terms of the sophistication of the reporting, the automation, the level of, customization that our platform can accommodate. And we're looking to continue investing in building out that depth or robustness behind the scenes as far as the workflows we can support, accommodating the sophisticated requirements of the largest wholesale financing lenders out there in the marketplace, so that we really can move towards, a broader population of lenders who are just licensing our software in addition to the folks that we're working with today.
So it sounds like still a lot of R&D investment, building out that product roadmap. And then with that Series A, any build out of your go-to-market motion?
Yeah, I mean, we've actually, I think, spent a lot of time lately thinking through what is a more segmented go-to-market motion. We have the new banks that are getting into the market. We have legacy lenders who are looking at us as a technology provider. But how do you bifurcate those different channels and think about the best way to reach prospects? It's kind of the beauty, but also the challenge that we navigate is there are thousands and thousands of banks out there who are, necessarily doing this type of lending. So we have a relatively captive audience. However, it is a heavy lift to implement a new solution like this. So you want to catch those folks as they're going through, revisiting what their product strategy is. Now, I think we benefit from the fact that most bank lenders today recognize that, whereas a decade ago, they thought they could build everything internally. I think there's been a general acceptance of working with best in class third party solutions, but we want to make sure that we're top of mind when they think about, what operating system are they going to use for their wholesale financing business.
And with that Series A, looking back on that, and for other founders who may be listening, contemplating a Series A raise, any lessons learned in that 8.5 million raise?
I would say we learned a lot of lessons,
Yeah.
a few painful ones. You want to make sure you're raising well before you have to. it's going to take a lot longer now than it did, 18 months ago. Make sure that, you find a lead investor who understands the evolving dynamics of your business very intuitively. We put an emphasis on strategics. So our lead investor is a group called Bank Tech Ventures, who has 105 community bank LPs. Obviously, that's great in terms of go to market. We have a strategic partner, a legacy technology provider in our space that invested from their corporate venture arm, which was great for us in terms of, just formalizing the strategic alignment of our organizations. But we really thought about it. If we have someone that could be an investor, but also, a channel through which we can reach more qualified customers, those were the folks that we really prioritize. And I think it's definitely paid a dividend already. I hopefully it's enough advice for today.
Yeah, no, that's no great lessons. And do you recall how long that Series A raise took?
It took about 6 months.
6 months. Okay. Okay. Yeah, that's good insight. Yeah, it sounds like maybe general common wisdom. Plan for at least 6 months for the raise. So probably in
Yeah,
today's
yeah. I
environment,
think
even longer.
we got excited about doing it in 3 or 4 months, and you get a couple. It's you gotta no matter what round it is, you still get super excited when you get the term sheet and you see a path towards completion. But inevitably, there's going to be twists and turns as you run through documentation, as you run through filling out the rest of the round. And, you never know when there's going to be an SVB blow up, which scares anyone who's operating in
Yeah,
the big tech space.
definitely. And then, John, at the current stage of your business, do you have a favorite number or metric that you're focused on to guide the business?
I think about what we look at as assets under management across direct lending and the indirect lending, or the lending as a service programs. What's the total portfolio looking like, and what percentage of that is coming from, or I should say, are all of our bank partners actively contributing to that figure? The worst thing that happens is, a bank comes on board and they don't engage with you and get something off the ground. So we want to make sure that we're delivering value to anyone who we've gone through the work of getting set up on the platform.
Okay, yeah, makes sense. And John, appreciate your time today. So, what's coming up next for Vero?
I think as we continue to evolve and mature as an organization, I've actually been spending a lot of time thinking about building the organizational structures that will allow us to scale effectively. It's a lot. There's a whole different set of challenges when you're a team of 25 versus a team of 8. And God knows there'll be a whole different set of challenges when we get to 50 and then 100. So I want to make sure that we have, organizational frameworks in place where we can take really good care of our people, keep them excited to show up at work, even as things are going to inevitably evolve over the next 12 to 18 months of growth. But as far as, business and kind of revenue goes, I think we've got a lot of these, what would from an outsider's view look like a niche opportunity, but there's a lot of them. And so making sure that we're supporting these initial partner engagements successfully, learning from them and figuring out what are the pockets that we really want to double down in. I think we're going to have a much more refined perspective around, what sandboxes do we want to play in going forward as we get through this initial volley.
Yeah, and I appreciate the insight. Before we wrap up, just want to hit upon org structure, which is really interesting, point. So staff around 25, you're the founder and CEO. What does your at this stage of your company, I think this is really interesting. What does your leadership team look like? Do you have VPs, directors, or is it just you calling all the shots?
Definitely critical to have some VPs and directors at this stage. We have a VP of credit, a VP of sales, director of ops, director of finance, director of risk. So, I think it's a very sound management team, but beyond 12 or 14, it becomes impossible to maintain the level of connectivity with all those folks on a regular basis, especially because processes are evolving, expectations are changing. Um, so I would say the management team is made up of industry operational folks that have come from our competitors that are, they've been around the block. And then also more the startup folks that are really good at building things, but don't necessarily have that industry expertise. And we've looked at that mind meld as a great way to make sure that we're not making mistakes, but also making sure that we're not just building the 2.0 version of something that's existed before.
Yeah, I really appreciate the insight because it's just interesting. Series A company, 25 staff or so, and just you've got already have a couple VPs, directors, and so on to help you guide the business, and industry experience, within those folks. So, John, really appreciate your insight, your experience, sharing your story today. If listeners would like to learn more about Vero, where should we send them online?
Our website is www.vero technologies.com, or you can find me on LinkedIn.
All right, perfect. If you'd like to learn more about John and what Vero's doing, check out vero-technologies.com. And John, really appreciate you coming on the show today.
Thanks so much for having me.